So coming back to the channel, we are back with another video on the engulfing candle, and this is the third video, which is going to be the last in the 3-video series about how to trade the engulfing candle. So to make a recap, the first video was about the engulfing with a moving average as the indicator, and the second video was about trading the engulfing candle with the Fibonacci. If you haven't seen these videos, just go back to our videos and see the videos we've posted prior to this. And then the last video is going to be the engulfing candle, trading the engulfing candle at key levels. Now, without wasting any time, let's just jump right into it, guys. I've already plotted some of the key levels. We are using Euro USD in the 4-hour chart, which is easier to see all the key levels. And without wasting time, let's jump right into it, guys. So I've labeled a downward trend, which is current right now in the Euro USD, and we are going to label some of the key levels, which is this is a major support right here, because price made a change at this point and tried to move to the upward side for a couple of candles, so 4-hour candles, and then broke this support again. Now we are waiting to see how the market reacts every time it comes back to this level, and if we get that good engulfing candle, that is the strategy we are looking for at this time. So our first entry will be right here. Let's put the eclipse in a white color to see it to be visible properly. So that is our first entry. Now this is a 4-hour time frame, so this means we are going to try and see how orders are going to come out and at what risk to reward. So this is the previous support, and this is the previous resistance, and we are trying to target resistance since we have entered a downward trend. So the short position at the 4-hour candle will be somewhere there, and we target this, which is the previous support right here. And as you can see, this is a 1.6 risk to reward ratio. Not bad, but as normally, you know, the best risk to reward at least should be above 2, which is 1 to 2 and above. So this is a 1.6, which is okay, and we're going to try and look for other entries too within our engulfing candle. Let's see. So if we come here, the price broke the support, which is the previous major key level, broke support, came to the downward side, and we're waiting for a pullback. We can see one pullback here, and we try to target this engulfing candle. We keep our stop loss right there, and we target a previous point where price has made a support, and it's right here. So in this case, this is not a good target, which means this is a good chance to explain this also. If you try to create your setup and you look at the setup whereby you don't have enough space to hit at least a 1-to-1 risk reward with a target of a zone you're trying to target, if it doesn't hit a 1-to-1, that is not a good risk to reward ratio. For example, we had a point here that could have worked as a target, and we had another point here. So if this first one doesn't hit a 1-to-1, this is not a good setup to trade. So this will have to delete it and wait for another good one. So what are we looking for? We are looking at how price reacts at this key level, this key support level. This is the first one, and this is the second time. So the second time, let's see, the second time would have been here. So this, as you can see, is an engulfing, and from the impulse move that pushed the price to this key level, as soon as you see this engulfing, it means you are back in the game. So this is where you open your position and you target this exact zone. So you target here, you open your position from there, and you target right here, which is the previous support. And as you can see, this is your holy grail order, which is a 4.6 return. Now this order rarely comes, but as soon as you get it, at least it gives you a decent amount. And if it is a week, this will be a good week for you, because you get that huge risk to reward in the order. So this is normally a good one. And as you can see, in the entire downward trend from here up to here, we've got two orders that have a good setup with the engulfing candle. It doesn't mean that there is no other setups. It just means that with the engulfing candle, there is two setups on the 4-hour chart that really make economic sense. Now, there are other orders that we can talk about in this trend because they are not part of the topic we are talking about today, which is trading the engulfing candle using the key levels in a trend. Now, this was a good example, and this was a good example. Now, if you look at the market structure right here, as you can see, there is another key level where market has been trying to create good supports that has been broken, and the price hasn't returned to this key level. So in this situation, what are you always waiting for? You are waiting for a point. We are waiting for price to move a little bit in these levels and reaches that point where we will always try to target an entry to the previous support. Since we're in a downward trend, try to monitor the movement of the price till it comes back to this zone without exiting the downward trend lines. So thanks for watching, guys, and if you haven't subscribed, please subscribe and hit the notification bell and tell all your trader friends to join. We offer insights, live analysis on a daily basis, and we post all our confirmed orders in our free Telegram channel. Joining is free. The link is in the description of our YouTube page, and it's going to be free for a limited time. So join now before it becomes a premium paid channel. Thanks for watching, guys, and